What does the Reserve Bank have in store? Now, if a rate cut happens, as is generally expected, then it would be the first in 5 years, as we just pointed out. On the other hand, there is now a fear that a rate cut could potentially hurt the rupee, already hitting record lows and triggering more outflows and putting more pressure on markets. So it's an unforgiving cycle of sorts. So what are the options before the Reserve Bank of India at this somewhat critical juncture, and what could be the way ahead? I reached out to Crisil chief economist DK Joshi, and I began by asking him to lay out what the Reserve Bank of India or India's central bank could be balancing, or what are the factors that could be influencing its thinking and approach right now.
The most important thing for RBI on a rate decision is the growth inflation dynamic. So domestic factors always have a higher weight than the other factors. And here I think I would say that the inflation is trending down, though it is not at the level where they want it to be, which is 4%, but it is gradually, indications are that it's moving towards that. And reason for that is food inflation is coming down and the agriculture is expected to be better. I think in the Rabi harvest is expected to be good. So that will also help. So the indications are that food inflation will head down. And from the non-food inflation side, there's not too much of risk because oil prices have already softened and commodity prices also are likely to remain soft in the current milieu. The fiscal policy, which was announced in the budget, is not inflationary because the overall fiscal impulse is lower than what it was last year. So from an inflation perspective, there is continued improvement. On the growth side, I think growth has come in at slower than expected. So, and even the budget factors in 10% GDP growth for 25-26, which is lower than what they had assumed in the previous year. So there is some downside to risk and the inflation is softening. So that is one part of the story. So from that angle, I think the rate cut is needed. But if you look at other factors, which are global in nature largely, you have global uncertainty because of the tariff wars, etc., back and forth on them. The liquidity conditions have tightened, and this is largely due to capital outflow, rupee intervention by the central bank to curb volatility in the currency. And that has created tighter liquidity conditions. And then to respond to that, the central bank ease the liquidity, because if they don't ease the liquidity, then rate cut doesn't have an impact. And even in the previous policy, the CRR was cut, which is a more blunt instrument to put liquidity in the system. So that is one side, the liquidity story. Then I think the other is globally, I think the central banks have become a little cautious on their rate cut. Particularly, I'm talking of the US Fed. And the Fed has paused in January, and the rate cut expectations are now that they will not cut as fast as they were planning to cut earlier. But nevertheless, I think they have begun the cycle last year. So the overall story from the global side is that different countries are acting differently according to their domestic requirements. Recently, the Bank of Indonesia cut interest rates despite the fact that they have a huge amount of foreign owned debt, and also because I think the currency was very volatile. Despite that, they cut rates because there was risk to growth. So I think most countries' domestic conditions always outweigh the external conditions. And I'm assuming the same thing for the central bank's perspective also. I think they've already hinted at some sort of easing by cutting CRR in the last policy. And I think the natural conclusion now is to move towards a rate cut, which we believe can happen in February itself.
Just to come back to currency, what is the role that currency is playing in this decision matrix?
The risk from currency weakening is that your imported inputs that you import, they become more expensive. So it can transmit into domestic inflation. So as I said, there are two things happening. The oil prices are soft, commodity prices are relatively soft. And so even if currency is making your imports expensive, I think the price of imports in itself is coming down. I think in many cases, particularly where it matters more, like oil. And oil may remain very volatile, hard to predict what's going to happen. But looks like, I think our assessment is that oil will remain soft. So there is some offset that comes from lower imported goods prices to the weakening of the currency.
Looking ahead now, what would, if there is an interest rate cut as expected, what could that rate cut be, or what is ideal to have any meaningful impact, and what would that impact potentially lead to?
Sure. I think the central banks typically don't go in for an aggressive rate cut unless there is some huge risk emerging in the system. So at this juncture, I would expect the usual playbook of the central bank, which is to cut rates in baby steps, which is 25 basis point. I think so. I would expect 25 basis point rate cut from RBI. Now, rate cuts do not impact the economy immediately. I think there's a lag of couple of quarters before they start impacting the economy. So it will have a slow impact. But it will impact the urban areas more than it will impact the rural areas, because urban areas have more credit penetration than rural areas. So I think that's the way it is going to play out. And one rate cut may be followed by another rate cut depending on how the situation arises. I think we've seen that US earlier expectation was that they'll keep cutting rates, but they've paused because of the changing dynamics. So here I would say that the current rate cut cycle is not going to be very deep. I think maybe 75 to 100 basis point total. I mean, the rates were increased by about 250 basis point, but the rate cut cycle will be less, or rather will be shallow this time.
Right. And we have a new governor now. And is there anything that you would like to see from him, not on monetary policy specifically, but from the overall Reserve Bank approach to financial markets? That it's not necessarily to do with him, but in general, is there anything else that you're looking out for?
Not particularly. I think right now, the main thing is the rate cut. I think we've analyzed the need for rate cut at this juncture.
Thank you so much for joining me.
Thank you, Govind. Always a pleasure.